Hello traders and welcome to another video review. Today is Tuesday, June 14th, 2022. We are going to start with the Forex calendar. Overnight session wasn't really a great one. Not too many important data had been released. One that is particularly interesting is industrial production data from Japan that meets the expectations. Minus 1.5%, which is worse than last reading of minus 1.3%. So industrial production in Japan is diving lower. Data from the United Kingdom are quite surprising and looking quite good, together with the unemployment rate, which is right now better than expected, which is worse because it rises to 3.8%. Last reading was 3.7%, so unemployment rate is rising in Great Britain. German CPI increases to 0.9% versus 0.8%. Totally misses the expectations of 0%, so another bad data for Germany and for the euro. And some of the German ZEW current condition sentiment are published, will be published at 11 a.m. today. So this is about in about 2 hours. At the same time, we got the industrial production and the ZEW economic sentiment for the whole European Union. During the New York session, we got the OPEC monthly report scheduled for release at 1 p.m. and then core PPI and PPI data, so the producer price index data from the US scheduled for release 2:30. The market participants expect the PPI to increase from 0.5% to 0.8%. Manufacturing sales from Canada scheduled for release at 2:30 as well. And then we got the API weekly crude oil stock data 10:30 after the New York session is closed, and some remarks and speeches from the ECB officials. The main event of the week is, of course, tomorrow. Tomorrow is the FOMC interest rate decision, so we might not have that violent day today as we should have normally on Tuesday. So please be prepared that most of the weekly volatility will be made tomorrow, basically. Because of the data from the US, let's take a look on the American markets first. We are going to start with S&P 500. S&P 500 has made a new low, and please notice the fact that this is kind of an unusual thing to see here. 3 days in a row this market is down, making gaps down. So what I've done is that I have changed the scenario to wave 4 at the level, the top for the wave 4 at the level of 4,188.87. The key technical resistance right now, it used to be support, now it's the resistance at the level of 4,109. and the previous local technical resistance at 4,064 points. Wave 4 is A, B, C, irregular flat, and then we have the wave 5 to the downside. That's supposed to end the wave C of the overall correction, ABC correction to the downside, which is right now the zigzag pattern. So what we should see in the during the coming days, maybe hours even, because as I said, the FOMC interest rate decision is tomorrow, is the ABC correction to the upside. Possibly, as far as I'm concerned, this correction might go as high as 4,100 points, and it should end very, very soon. Why do I think like that? Because the momentum is, of course, almost on the level of 30, which is extremely oversold, of course, and this means that there is a bullish divergence between wave 3 and wave 5. So we should be prepared for the relief rally during the FOMC Fed interest rate decision. This move down in wave 5 in our scenario is in the anticipation of the another interest rate rate hike by the Fed as expected, right? So this is the anticipation, and then we should wait for the relief rally for the S&P 500. So this is the S&P 500. What is gold doing then? The spot gold market, it posted very interesting pattern on a daily time frame chart. This is a clearly bearish engulfing pattern into 61% of the Fibonacci retracement of the last move to the upside. We should just move it here. The 61%, $1,821 had been violated. So right now this is not relevant anymore, and as you can see, we are still trading above wave C high, low 1786. There is still a chance for this market to rally, to move higher, despite the fact that we got this very big bearish engulfing pattern. Right now the key level, let me just put it my blue arrow here, 1877, 1900 is the key zone, of course, and we should expect the breakout to the upside after this ABC correction had been completed, right? It might take some time for this scenario to develop. This might be something that technical traders called broadening triangle. It's very rare formation. However, if it is the broadening triangle, the next rally to the upside should be towards the level of $2,000, and this is of course around the high of the wave B. So that again, this pattern will be corrective again. So this is the A, this is possibly wave B. We are waiting for the wave C to the upside, and then we will see. For now I got this kind of a pattern here. This pattern is valid as long as the low of the wave C, which is at $1,786 per ounce of gold, is not clearly and purely violated. So the gold, what is doing on the euro dollar? What is going on the euro dollar? As expected, we broke below the support at 1.0628 and just went straight down. Our arrow, as you can see, the red arrow is pointing the level of 1.034341. This is the low for the middle of the May, of course, and it might be tested very soon. The 1.0472 is now immediate technical resistance, so we will just change the color to the red. And please notice the fact that we are again out of the main long term descending channel. We didn't even try to move higher towards 1.0933. This is the key supply zone. Bears are very strong, bulls are weak for now. Okay, maybe there will be some sort of a double bottom here on a daily time frame chart. Maybe we will see. However, the market of the euro dollar looks very heavy. And last but not least, the Bitcoin. The Bitcoin is moving exactly as we planned. Exactly is doing what we thought the market will do after this period of the consolidation, and even somehow a kind of a triangle pattern in wave 4 had been made even on during this time. This is of course now the key supply zone, 27,929 to 31,437. Why this is the key supply zone? It used to be demand zone. It used to be very nice demand zone. Right now it is a supply zone. We have a new low, and now we have even lower low made during the last 7 days. 1 2 3 4 5 6 7. This is the 8th day of trading. Of course, there is some kind of a pin bar on the daily time frame chart on a Bitcoin in progress right now. However, please notice the fact that we are just started to dropping down. However, it's still the wave 5, of course. So it's the last wave of the of the ABC corrective pattern. Now the market conditions are extremely oversold. However, the recent low is $20,833, but I think that we should hit the 19,926 before the wave 5 will be terminated and some kind of a relief rally is done in form of the corrective ABC movement, right? So maybe something like this will happen soon, and that will be the correction. Maybe it will be a little bit bigger, maybe not. That's pure speculation right now. However, we are right now on the during the last wave down on the Bitcoin. Please be prepared for a short squeeze, relief rally, corrective pattern, corrective cycle to the upside coming very, very soon to the cryptocurrency markets. This is what I can tell from the technical picture of the recent drop on the Bitcoin, right? This is the wave A, this is the wave B, and this is the wave, possibly the end of the wave C. Let me just change the degree so there is no mistake here. A, B, of course B is here, right? The top for the wave B is right about here. A, B, and C is about to it's either completed and terminated, or it's about to be completed, the wave C, because the wave 5 is now about to be terminated as well. Maybe 19,926 will be hit, and then ABC to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.